Everybody, how you doing? You have a nice weekend? Yeah, it was raining pips last week. Time to give some pips back, right? Hey, don't be a cliche. So let's get going. It's a Monday. We got to go through the calendar, looking at risk events for the week or opportunities, depending on how you look at it. Got to go through the commitment of traders report and find the large positions in the market held by hedge funds. If we have any time left over, we'll tinker around with some technical analysis. But we will also meet tomorrow and the next day. The next day after that, I'll be on my way to China. The next day after that, I'll be at fxstreet.com, but I'll do it live from Shenzhen if I'm there and all that kind of stuff. So, yeah, it's going to be a good week. So let's fire this thing up, huh? Let's go, Bobo. So, welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. However, your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hola, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. We're an ECN. You click a button, we enter your trade into the interbanking system. We do it at a fair price. We do it quickly. My research shows, my independent research has shown that we enter it into the system faster and we get your trade out when you click close faster than most brokers, especially the big boys. Right? At a fair price without any drama. That's the kind of partner you need when you decide to start your successful Forex trading business, and we'd like to be your prime broker. Do these sessions every day. Why? I want you to develop skills and confidence so one day you can trade with real money, profitably, and with confidence, with a focus on the long term and not some strange get-rich-quick scheme, but with real skills. Charles says Traders Way rocks. Thank you, Charlie. We do these sessions every Monday through Thursday here at Forex.Today. Thank you, Forex.Today. And every Friday at FX Street, where I am Forex Speaker of the Year. So thank you for your loyalty. Without that, obviously, I wouldn't be Forex Speaker of the Year. So thank you. So what's going on, huh? Asia, Chinese CPI, 2.3. Not so good. Not bad. I mean, compared to the rest of the world, that's pretty good, huh? But for China, that's not that good. And it's we were expecting 2.4. Wah, wah, wah. Oh, Alan says, safe journey to Shenzhen. Thank you very much. I'll take that. Yeah, it's just a quick little trip, just 24 hours there. 3 planes, yeah. Just a quick 24-hour flight. Oh no. Oh no. Yeah. Woo, that's a long ways. So anyways, Chinese CPI, no so good. PPI, negative 4.3. I don't know. That doesn't seem good to me, right? 49 months in a row of negative numbers. Okay. No so good. Then I just threw some other things up there because I didn't know what else to put up there. Australian home loans, Kiwi retail credit card spending, 0.1. Oh, wow. Okay. Machine orders, big negative number. Well, you know, that's capital expenditures, and, you know, right now that's not a likelihood. So the real big news here, the only thing that really matters is this this area here. Oops, it's in yellow. Let's do it in red. Okay. And, you know, it's not good. It's not horrible. It's basically on trend. Trend is disappointing. Europe, nothing happened in the European session, right? Some Northern European central banks got together and they're like, hey, guess what? Quantitative easing, diminishing returns. All right, fine, good, great. That's going to be helpful, by the way, Northern European central banks. Good job in helping. Verbal intervention out of the Bank of Japan. Look, or the Japanese government and whoever else. It doesn't matter. Doesn't matter. Hey, look at that, Joseph Trzavani. Hey, he's on TV. He's an old friend. You know how he started? By the way, there he is right now on CNBC talking about Janet Yellen and foreign currency. You know his story? He was a New York City cab driver. Yeah, you could be a cab driver one day, you could be on TV. Joseph Trzavani? Yeah. So he decides to do something. I don't know. I guess he gets some education or something somewhere, and he gets a job for some finance company. And they're like, why don't you do the Forex stuff? Well, I'll throw you a bone. Why don't you do this Forex stuff? So he moves to Bermuda, where the firm does trading. And he's like, yeah, I'm on the island. I have no friends at the company because I'm the only foreign exchange trader. So after a few months on the island, he finds out there's like 6 other dudes that do foreign exchange. He befriends them. He's living in Bermuda, trading Forex. Nice, huh? Then he was part of a company called FX Solutions, if you remember them. Yeah, so anyways, he did quite well for himself. And then FX Solutions was sold and he got a big payout. It's good for him. Anyway, so there's the story, guys. You can be in a foreign exchange trader a few years earlier. You could be a cab driver. Who taught him to trade? Don't know. He's one of these guys where I think he might seriously just be all fundamental, a really good analyst and stuff. I don't know if he actually trades, to be honest with you. But his fundamental analysis is quite good. Yeah. Anyways, nice guy. All right, so going back to this, what else? Pretty boring session. A lot of profit taking off the big moves that we had last week. Not a shocker, right? Can we access the stuff, Charlie? Yeah, Charles says, can we access Joseph's stuff? Yeah, sure. Yeah, he publishes stuff worldwide something, worldwide web forex or something. I don't know, but just Google it. I know Trzavani is not the easiest name, but there can't be too many Joseph Trzavani Forex if you do Google. But yeah, his fundamental analysis is usually spot on. I've had dinner with him a couple of times in New York and once in Spain, and shared a cab with him here and there, which was funny. He's like, "Hey, I used to drive a cab," but yeah, nice guy. Good people, as they say. Good people. All right, Norwegian CPI 0.5, 3.3 year over year. That's better than China. Good job, Norway. So how he makes money from fundamental analysis and not trading? Well, he works for a firm, Miles. So he worked for, like I said, a company called FX Solutions. You know, he's a talking head. He's an analyst, gets paid. But maybe he trades. Honestly, I don't know. Or he could be a consultant for firms that say, "Hey, man, we need a global macro perspective." He could totally do that. Okay. But like I said, he's worked for other firms and stuff. But so I guess he must know how to trade. Obviously, if he worked for a bank in Bermuda and stuff like that, or a firm or whatever it was. Okay, so yeah, okay, he is a trader. I'll take it. I'll give it to him. Yeah. Hey, I didn't live in Bermuda. Doesn't that sound like a good gig? Hey, we're going to pay you money to live in Bermuda, but you're going to have to trade Forex. You're like, really? Yeah. You're like, oh, man. I met another guy. He's like, yeah, when I was 22, he said, he got a job flying airplanes from Puerto Rico. And they're like, yeah, you're going to fly airplanes all day from exotic island to exotic island to exotic island and back to Puerto Rico. We're going to pay you American money, and you're just going to have to live in Puerto Rico as a young man flying airplanes, getting paid U.S. dollars with, lots of pretty girls and lots of booze. And he's like, yeah, it was a tough gig. Party on the beach all night, flying airplanes all day. Yeah, it was a tough gig. What a way to learn an airplane, huh? Or learn how to fly. So anyways, what's going on in this session? Baltic Dry Index. Boy, I'm really trying to get something to put up here, right? Russian trade balance, right? Let's see how much they export, right? Oil, basically, right? Mexican industrial production, okay. And then a couple of Fed guys speaking today, one this morning right before the market open, one at lunchtime. So Miles says Russia not doing that bad. Well, maybe. Depends on how you look at that. You thought worse, but what does it also mean? If oil prices have dropped and they're maintaining the same amount of exports, they've had to pump more oil. No, they're usually just people talking, speeches and stuff. Do you know how you can tell if a central banker is lying? Yeah, their lips are moving. So it's an opportunity to move their lips. So, that's so negative. We shouldn't be negative. We're positive people here, aren't we? So let's play the happy music and happily look for opportunities to make tons of money, huh? Bum, 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 bum. Forex.Today. Oh, you know what? I didn't share my screen yet. Shame on you. Share your screen. Hopefully this doesn't take 10 minutes. All right. Shiny, happy people holding hands. People. Shiny. Okay, here we go, right? G'day, mate. Sharon and Karen. All right, cool. So you should be able to see, and thank you to the analysts that have posted their trading ideas for the day. I hope the general community has given feedback as a way to even improve their own thoughts over the market to say, hey, if somebody thinks the USD Swiss franc's going down, what if I disagree with it? And then maybe you can leave a comment back to them. Okay? So here we are, Forex.Today. Have you looked at some of the analysis? Right? We've hired a few new analysts to add even more feedback every single day. I mean, look, it takes a while to write all this down. Think about it, right? Even to think about it, it takes a while, doesn't it? Look, how long did that take me? Okay, but look it. So anyways, do you agree? Do you not agree? Okay, and somebody asked about having it blow up full screen. Well, we did that for you too. There you go. Bob, I don't know anything about that. Yeah, I don't know anything about that. Haven't heard anything. It just might be where the server's located. You know, brokers close their books and do rollover at their particular time. Not all, so for example, if you're in London, it closes at 5 p.m. London on Friday. In New York, it's going to be 5 p.m. New York on Friday, and so on and so forth. So rollover is a localized issue. So maybe they roll over, in this case, close at a different time than that you're used to, but it's just a server issue. Okay. So, anyways, guys, feel free to go through all the trade analysis that's posted for you. These are real people. They have real experience in the market. They're sharing real thoughts. They're putting real effort into their trading ideas for you. At least review it and leave a comment. And if I were me, I just said nice post, good job. But you could ask a question, and you could also agree or disagree and share your thought why. That would be a better use of it. So you think about it and say, all right, now I think I believe I understand what their point of view, and then you could either write a counter piece to it or share your thoughts and so on and so forth, right? Yeah, Jimmy says the rollover close might be due to different savings time issues. That's also a good point. Plus a rollover issue, right? Could be, yeah. Nothing sinister, Bobby boy. Nothing sinister. All right. So, anyways, that's Forex.Today. Thank you to the analyst team. Let's start with the opportunities and threats. I'm going to filter it. Let's go twosies and threesies. Is that too many? Ooh, well, yeah, 2 pages. Ooh, all right, let's do threesies only. Yeah, a little better. All right. Shiny, happy people. Mhm. Well, Ryan, that was supposed to be YJ, except someone offered him a fortune to work for them. He apologized. He's like, it's so much money. I just have to take it and delay my Forex career for 2 years. I'm like, yeah, that's a lot of money. You should do that. But yeah. All righty. I have to close this. All right, let's get my pen out again. Okay, these are all threesies. British CPI, all right? UK CPI, very nice. We're interested in good news out of the UK in this quarter. Remember, I'm expecting, in particular, we're past the non-farm payrolls, we're past the mutual fund Monday. So really, we've been expecting and talking about the UK recovering. And I'd like to see a big rally this week in the UK. Remember on Friday we were at a line in the sand for support. You guys remember all this? So we're hoping this week we get a nice rally out of the UK. Doesn't mean it has to happen, but that's what we're looking for. PPI out of the United States of America, yeah, well, a recovery out of PPI might show a recovery in commodity prices. in general. And eventually that'll roll over into PPI and eventually PPI. But PPI, inflation at PPI level probably takes at least a year before that goes into CPI. And CPI is what moves our industry. But it's going to show up in PPI first. Retail sales, the consumer in the United States has actually been pretty good for a while. I mean, yeah, I'd like to see that continue. We're forecasting a positive number month over month. Okay, cool. Year over year, the numbers are pretty good. Americans are doing fairly well. They've spent 3 or 4 or 5 years saving money and paying down their debt. Their homes have gone up in value 5, 6, 7, 8% per year for several years in a row. Homes are selling quickly. Rates are still low, so disposable income's starting to kick in. And those that didn't have a job that finally got a job have had a job for a year or so. So, we're good. And that should, these retail sales should continue. Core retail sales are interesting because core strips out things like gasoline and oil. And and usually that means headline retail sales will include oil and gas. And that usually makes retail sales higher. Right now, that makes retail sales lower. But realize that we've probably hit rock bottom at $25 or $26 a barrel. And, if that's the floor, then there's only up. Right? Now, I believe there's also a ceiling, and that will bounce between 30 and 60 for the next 5 or 10 years. Okay, but anyways. And then Bank of Canada, what are they going to do, eh? So that's going to be a doozy. And they also give us their monetary report, which is something that you should download and read if it's available. Who's that right, eh? Yeah. So read it. Press conference, good. So, CAD's going to move this week, eh? And CAD has done well with weak dollar. Now, I've been reading over the weekend and doing my market research. Isn't it amazing? I don't know if you've read the same type of things, but I must have read 3 or 4 reports. And experts flat out say in the reports that they have no idea why the Japanese yen is strong right now. And they debate it, and they talk about it. And they guess. But most of them say they just have no idea. Isn't it amazing that they just don't know very basic things like fiscal year end in Japan? Or that it has nothing to do with the Japanese yen per se, but a lot of it is the USD weakening. And why is the USD weakening? Well, the Fed told us 4 rate hikes, and then they told us 2 rate hikes, and now we're thinking 2, maybe only 1. So the dollar was overvalued and leveraged up on yen, and a lot of other things were leveraged up on yen, but so all that leverage has to unwind, and it's amazing that they just don't get it. So, look at the USD CAD. Remember how that thing was on its way to 150? But look at the USD CAD now. It's been down and down and down for the whole week. Off that double top, it just dropped like a ton of bricks. Same thing if you look at USD yen. So you're like, well, maybe a lot of this USD yen move is actually US dollar. Oh, boom. You just blew the mind of experts. Oh my gosh. And then throw in normal things like, cashing out, for tax reasons and stuff in April. Fiscal year end, I can't fathom that complexity. Many years ago, I was at a hedge fund meeting in New York City. You had to be a licensed hedge fund manager to even be invited. So I'm like, yeah, that sounds like a good reason to go to New York. So I'm there with all these trillionaires, right? Masters of the universe. And then there's a nice little luncheon, not too fancy, nice little sandwiches. I'm sitting out, I'm looking for a place to sit, and there's outside, and there's a little table and 2 chairs. So I'm like, I sit down and I'm eating my little sandwich, right? And then another guy says, "Hey, do you mind if I sit?" And I'm like, "Oh yeah, pop a squat." So he does, and we're talking, and he says, I say, "Hey, so what do you do?" "Oh, merger arbitrage." And at the time, I remember, oh wow, I don't know what that is. I don't know exactly what he does. And then he says, "What do you do?" And I do. "Oh well, I'm a foreign exchange trader." "Oh, I could never do that," he says. It's too complicated. There we are, sitting there thinking the other guy's smarter. Now I know merger arbitrage, but I probably don't know how to find the right opportunities. But anyways, I thought that was pretty funny. "Oh, I could never do that." Wow, it's just way too complicated, he thought. Yeah, well, I guess if you don't know, it's complicated. All right, so is that Aussie or Kiwi? I always have to double check. The flags are so small. Yeah, okay. Aussie jobs report. Boom, boom, boom. I love Aussie jobs report. I love it. That is a scalp, ladies and germs. Aussie jobs report. If you get 50 to 100 pips, take the money and run. Okay, that's not a buy and hold. That is, that's a 50-100 OCO if I've ever seen one. Okay, so that's good, good, good. Bank of England interest rate decision. Who cares? Well, maybe we should pay attention. Okay, we should probably pay attention to that one. Okay, obviously they're not going to raise interest rates, but maybe they start talking good. Maybe they talk good. You talk good. Happy fun time, right? Out of the UK. It's all the same thing. Monetary policy summary. Yeah, yeah, yeah. Download it and read it. Okay, so there's 2 this week you have to download and read, eh? Are you willing to do that? Fred, no. That correlation existed 8 years ago. So remember, the correlations have to do with people's mindset and investing money. So what happened 8 or 9 years ago is irrelevant today, right? You're not the same man you used to be. The market's not the same as it used to be. Doesn't mean it's not correlated, but at that time, people were buying the euro because it was still a fairly new currency, and it was challenging the U.S. dollar as a reserve currency. Plus, the U.S. stock market had been up, for 1,000 years, and so American money was leaving the United States to go into alternative investments like Europe and Asia. And the stock market went up, right? The U.S. dollar got weak because Americans were investing overseas because you had to be in Asia. The Asian tigers, got to get the Asian tigers, right? And that was the mentality. So the U.S. dollar got weak, and other investment opportunities went up because that's where the money was flowing. Okay, so the stock market would go up. People would say risk on. People would buy Asian tigers and, that kind of thing. So Asian currencies were going up, except the yen, of course, because of funding currency. And it went down. But we were also putting money into Europe because it looked like the hot new thing. So, pound dollar went up, euro dollar went up, euro yen went up, pound yen went up, Aussie yen went up, Kiwi yen went up, right? That kind of thing. And so the correlation was high. When it was risk on, euro yen went up because euro dollar went up, and the Japanese yen weakened because it was a leveraging currency. Okay, that's good. Does that exist today? Well, maybe. Take a look. I noticed the correlations are changing, right? The correlations are changing. It used to be the stock market went up, the US dollar got strong. Well, the stock market is up today, but the dollar is down. Okay? Perhaps that correlation's changing. Also, if oil went up, the stock market went up, but that correlation has changed. Okay? So they can and do change depending on people's investment decision-making processes changing. And it's a healthy, normal thing to actually, I think. Well, Jimmy says he's same with quantitative easing. Well, when you do quantitative easing, it's designed to increase asset prices. Okay? Another way of saying it is devaluing the currency. The prices are higher because the currency is worth less. So the stock market would go up, asset prices would go up, right? What assets? How about the value of the 500 largest companies in the United States, or whatever you're measuring, right? So you print money, there's more money, the value of each dollar falls, right? The purchasing power of each dollar falls, therefore the price goes up, okay? Or you could say money is free and it's being pumped into the economy, and that's going to lead to future profits, and the value of those stocks will go up based on future earnings and future profits. Whatever, stock market goes up, currency goes down. Well, then the opposite happened. The stock market went up, but the dollar got strong. But now we're raising interest rates, stock market goes up, right? Currency not going up. But if you raise interest rates too fast, stock market comes down. So you got to pay attention. So as we saw, the velocity of the rate hikes mattered, right? 4 in 1 year? Holy smokes, Fed. What the heck were you thinking, right? Stock market crashed. Then they've backed off, stock market's going up. So you just got to pay attention, because what does it all mean is more important than anything. Okay, US CPI, yeah, it's going to be good. Good. You know, 1.1. What's the target? 2.0. You know, core, we're looking at 2.2. So, you know, if that's your gauge of inflation, you know, we got our 2.0 that the Fed wants, right? And we got full employment that the Fed wants, right? Remember, 5.0 or lower, full employment, right? So we got our 5.0. What is it? 4.9, right? And we got our 2.0 if you're using headline core CPI. Cool. So the Fed should jack up interest rates, right? That's so last month. Weekly unemployment claims, good. Yeah. Good. And of course, I am going to be in China so that I can personally receive the GDP number directly from China, because that's what I demand. Kind of trader I am. Give it to me, China, now. Oh, and by the way, I'll be in the club level at the Ritz-Carlton. Would you please deliver it there? Thank you. I'll be having I will have my 11 a.m. pre-lunch presentation. Nice little sandwiches with a little crab on it and cucumber. Yeah. Yeah, life's tough. And then I have my manicure. And then I'll have my seaweed scrub. And then University of Michigan consumer sentiment. What a joke. So anyway, so there's the week. Pretty good week, guys. Pretty good week. Okay. No. Diet. What diet? Yeah, I am wearing white pants like a European. Look at that. I'm a 20-year-old golfer. Look at that. White pants. Not bad. Like a European 20-year-old. Look at that. Not bad for a 40-something, huh? Yeah, my wife says I look like I'm 70. So I cried like a real man. So anyways, I'll just take some more fat pills. Okay. All right, let's go with it. Nick says, white pants always make you so dirty. Yeah. Well, yeah. All right, euro. Okay. Less shorts. No one really buying. Right? Wow, huh? Nobody shorting. So look at this. I guess I'll highlight it in case it's not coming through very well. This is the number of shorts, short trading. The number of actual positions open that are negative, short positions. So about whatever that is, 15,000 or 150,000. I don't know what that is. I guess 1.5 million, maybe. I don't know. 15. Okay. All right, that's the number of shorts, but it was up here. That's a significant decline in the number, right? Or if you want to do it this way, think of it as a bar chart, okay? We were here at one point, right? And now we're here. Clearly a decrease in the number of short positions, right? That'd actually be a good way to do the report, wouldn't it? Be nice to see it as a bar chart. Then the shorts increased and then they decreased again. Okay, so that's the number of contracts open on the bearish side, right? So clearly a downtrend. Less shorts means what? All else being equal, if we're only measuring short positions, what would likely happen to the currency? Yeah, it's taking profit, I agree, but what happens to the valuation of the currency? It can go up, yeah, because those positions are being offset with buy orders, right? Because the short order is already in the market, so to cancel it out, you have to go long, so to speak. Freddie says, don't I use this as a counter indicator and stuff? No, I don't. I don't. There are lots of ways to use this or interpret this information. A lot of people really like to look for extreme highs and lows. Like if you took, do you guys know Larry Williams? For me, he made this commitment reports famous, but he's the type of guy that makes 2 trades a year, right? And he can enter in a trade 6 weeks late. Probably doesn't use a stop loss either. So, all right. So if you're a pure trend trader, yeah. But for me, I just can't enter a trade 6 weeks late. 6 weeks late. 6 weeks late. And you'll say, yeah, well, see, we had to turn the corner in the commitment of traders report. Well, come on, dude. So anyways, different style of trading. But so what I like to look for is not just the peaks and the valleys or the extreme peaks and valleys, but this explains a lot to me. Okay, the Euro USD has gone up. So this red and now blue is the price. So Euro USD has gone up. Has anyone bought it? Look at the gray line here. Come on. That's the number of contracts long. So is there new buyers in the market? Is the market saying we've printed bottom? Are big institutional investors buying euro? Think about it. This is what the big money's doing. Are big institutional investors, maybe they're hedge funds, but they could be insurance companies and endowments and so on and so forth. Are they throwing their money in because the euro's hit bottom? Absolutely no way. So the euro USD has skyrocketed. And if you ask me, 80 or 90% of that move is short covering. So someday when we're at key resistance, somebody's going to sell it again. Okay, I'm not looking for buyers really. What I'm looking for is in the next few weeks that this line goes back up. And if so, Euro USD is going down like a ton of bricks. I'm going down in the burning ring of fire. I go down, 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 and the flames get higher, and it burns, burns, burns. That ring of fire, that ring of fire. Yeah! Yeah, it's going down in a burning ring of fire. Throw your euros into in a ring of fire, right? All right. Piggy, 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 can't you see? Sometimes your pips just hypnotize me. And I just love your profit ways. Guess that's why you're broke. They're broke and you're so paid. All right. So here's a little piggy, Great British Pound. Holy smokes, huh? Indecision 2016. What happened to those buyers, huh? Yeah. What about those shorting? I think there's still a lot of downside interest on this thing. Oops. Right? A lot of downside interest. It's pretty early to say there's a bullish move. That is generally the trend. Okay? What does it mean to price when you see this trend here? The orange line trending up. What should that mean to the valuation of the British pound? Yeah, that what this shows is more people selling. Sometimes this is hard to get your head around, right? More people selling, which means the red line should fall. Red line meaning price. Pound dollar. Yeah. And that trend still seems to be there. So if you were a bull, wouldn't you want to see this orange line falling? The answer to that is yes. The only thing stopping you are the bulls. Okay. Now, I do kind of I do sort of Hail Mary want the orange line to come down and the red line to go up, and it's here, right? Well, look at that on the news. Dubai wants to build another tallest building in the world. Huh. Cool. Because one is not enough. The one thing about Dubai, right? They'll say if one will do, build 10. That's the old rule in Dubai. Okay. So anyways, so yeah, if I wanted the Great British Pound to go up, these other things would need to be going in different directions. So let me say it this way: if you're a bull, you're guessing what the data will start to be and then the market will interpret that data the same way that you do, and then positions will change in the market, not just opinions, but positions. According to this, it has not happened yet. So don't be a fool. Okay? That shows us British pound should fall. And yes, someone jumped in the market. Okay, that's cool. To be a bull, this needs to go up and this needs to go down, and I don't see it yet. But you could actually sit down with a client and explain this, that the Great British Pound has been down for a while, right? And maybe it has to do with Brexit and all that kind of stuff. But you're doing your research, you're doing your analysis, you're developing your alpha, and this is on your radar screen. Well, Ryan says after June, but June may be too late. Because then it skyrockets and you're not in it. And you'll say, well, I watched it for a year and a half and did nothing. So, okay, you could buy at lows and break even. Sure. Yeah. You could definitely do that all summer or until June. Sure. You just can't get frustrated with it. Just say, well, I'm Brexiting. And if it goes my way, I make money. I mean, that's it. And that is probably an intelligent way. But most people give up or they don't do it right, and they buy and watch it fall, and they're like, well, I'll just use 500 pip stops. No. No. Okay? Or you start to say, well, if this started heading down before June, and then we had an uptick here, and look at the size in 1 week, guys. Lots of people bought it. So, I don't know, you pay attention. Okay, that might have started today. So you won't know for a week. But if you can confirm it next week that, buyers came to the market and sellers got out, holy smokes. But for other people, they just don't know. They can't tell the difference, right? They just don't know why the market's going up or down, right? If you're having Forex troubles, I feel sorry for you, son. I got 99 problems, but pip ain't one. So, you're informed. You should know why the market's moving. And know when to hold them, know when to fold them, right? Oh, did you like that, Mitchell? Yeah. That's class right there. That's class. Okay. Yin yen. So you're invited on CNBC or Bloomberg, and they say, you're a Forex expert. What's going on with the yen? What's going on with the yen? What's going on with the yen? Well, based on normal seasonality and fiscal year end, there tends to be yen strength in the first week of April. Also, if you look at the commitment of traders report, in particular, the non-hedging speculative open FX positions by large institutional investors, there seems to be no increase in long or short. So the market is still net neutral, which means a lot of the move has to do with a decrease in the value of the US dollar. It was overvalued because just at the end of December, the Fed told us 4 rate hikes, so that was priced in. Then they said, no, it's only 2. And so the US dollar was overvalued. Now they're saying 1. So the US dollar must weaken further to price in this new information. Stupid! I mean, I just don't get it. I mean, I'm flabbergasted that I can read through like Barron's magazine, guys. Barron's, right? This isn't, you know, I don't know, what do you call it? Economics Light. I mean, no, for institutional investors read this magazine. And there was at least 3 articles in just that one that they're like, no one understands why the yen is strong. I just don't understand why they don't understand. It's just, I'm no joke, just like flabbergasted. But I don't know. Because I don't think I'm a genius. I don't. I think I've done some research and I've thought about it a little bit. And I've been around, I guess, long enough. But, how many professional traders have been trading longer than 10 or 12 years? How many professionals have been trading for 25 or 30 years, right? I don't get it, why they don't get it. Just bewildering to me. So anyways, look at the facts. Golly. There's been no change in that, right? Minor changes. Okay. Yes, some people did buy the yen. Okay, fine. I'm fine. Okay, there's a little bit in there. But a lot of that is going to be dollar based. Why? Because the Fed effed it up. Right? How can you go from December 20th and they give us a 4 dot plot? And then by January 20th, they've cut the 4 rate hikes down to 2. Well, clearly the dollar's going to be overvalued. Wow, yeah. Whatever. Basic facts help. Bikini ski record. Uh-oh. Yep, that's good TV right there. 10,000 girls skiing in their bikinis. Yeah, that'll get you some airtime. All right. Yeah, Bloomberg. There's no, that's CNBC. There's like I went through the calendar today and there's like nothing on the calendar, right? So what else are they going to do? Yeah, the world's bikini ski record. And the next thing they're going to do is show like cute baby kittens. Felipe, you just pay money. This is actually CNBC Asia, actually. So you just buy, it's like $8 a month. You can watch it 24 hours a day, 7 days a week if you want. And then, of course, Bloomberg, watch that as well. Yeah, without kittens or girls, there'd be no internet, without a doubt. All right. Okay, this is, what are we looking at now? Aussie dollar. Okay. Gray line, there's buyers. Yeah, well, there's been some buyers in the market. Tapered off a little bit last week, but not a dramatic change. Okay. And then this other line, the orange kind of line, I'll go back a little farther. What's the trend here? The orange line, okay, oops. That's short positions, sellers. Less and less and less and less sellers. Okay. But it was way up here, right? So significantly less sellers. And what's the trend in buyers? Right? Interesting. What happened with less and less sellers and more buyers? What happened to price? Okay. Is it an opportunity to corner the market in the Aussie? Okay. Aussie has been net long since February. There are more buyers than sellers since February. So maybe just based on that, you say, well, I don't have it technically. Because if you look at the price, guys, okay, let's just say price is here, and then it kind of does this. Okay, we've double bottomed, right? But the daily and the 4 hour are not bullish, are they? In the 4 hour, we're kind of up here, and we've just kind of mini double bottom, right? At some point, you might say, I'm a bull, right? And at some point, you make a decision and you buy the dip. So, yeah, if you're looking at 4 hour Aussie yen, okay, it's double bottomed on the 4 hour, coming up to challenge the 21. Well, if it breaks that, and that either means Aussie strength or yen weakness. In either way, you're going to have a big change, right? Yeah. Now, if you're looking at the Aussie dollar, sorry, I was looking at Aussie yen, as you probably figured out. But Aussie dollar still is sort of double bottoming on a 4 hour, maybe not as clear, but it may be on its way back up to the top of the range. And on its daily, we're at the bottom of a range, right? So, anyways, technically, just make a decision. Fundamentally, I guess you could look at it and say, based on this, you're either a bull or a bear. And then once you've made your decision, go into the charts and look for bullish or bearish opportunities depending on what the fundamentals have told you. Okay. Not much bearish activity here, guys. Do you see any bearish activity? Right? So that might give you the green light to buy dips. No one's going to challenge you if you have a double bottom. Maybe, right? I don't know. Make a decision. Kiwi. Downish. Upish. Neutral. So you need to make a decision. Maybe you're just neutral and you ignore it. Or you watch the 4 hour Kiwi yen break the 21 and buy a dip. And you say, well, it's neutral, but I got the carry and a double bottom with a higher high begets, a higher low, so I'll buy the dip and jam the stop. Maybe I lose 50 pips. Maybe I'm in this trade till the end of the year. Right? When was the last time you did a 55,000 OCO? All right, that sounds crazy. How about 51,000 OCO? Well, maybe that's how you do it. Oh, but the yen is so strong. Well, I told you it'd be strong in the beginning of April. Maybe the beginning of the third week is the end of the beginning of April. It's the beginning. No, yeah, it's the end of the beginning of April, right? And everyone else will still be talking strong yen, and you'll be long and strong yen pairs. And you're like, yeah, well, but I don't know. Play it the way you want. Use like Aussie dollar, or not Aussie dollar, sorry, USD yen. 15-minute chart. We double bottom, made a higher high. Are you buying dips or not? Did you buy it at 108? Yes or no? Pretty simple stuff, right? So I don't mind being wrong. Like if you work for me, I wouldn't mind you being wrong, but you just better have, 3 good reasons why you were long, or, and then it didn't work out. Like, wow, I had the double bottom higher high off of a psych level after, 3 or 4 weeks of strength, but I figured the repatriation flow was over. So I saw the double bottom higher high and I bought the dip and I jammed the stop and I lost 50 pips. And I'm like, boom, high five, dude. I won't cry for you, Argentina. And everything's fine, Was that worth 50 pips? Hell yeah. Right? Yeah, I had a 5,500 on that. Seemed like it was going to work. Whatever, right? Just make a decision, manage the risk. Don't worry about being right all the time. Okay, and then what? Kitty cat, check that out. Isn't that funny? Hallelujah. The market is exactly neutral. There are exactly the same amount of bulls and bears in the market. That's a fundamental kiss if I've ever seen one. Bulls and bears making out. I love you, bull. I love you, bear. Huh? They're snuggling right there, huh? Isn't that cute? Bulls and bears spooning. You don't see that very often. It means that the cat is a pig, right? Mitchell, there are three things in this world: bulls, bears, and pigs. And pigs get slaughtered. So yeah, is the market bullish or bearish? No. Right? Isn't that funny? Is the market bullish or bearish? No. Holy smokes, eh? So I guess if you were going to play it, you would play this is trending down and this is trending up. Okay? So you would continue to short USD kitty cat. Greg says, are they sleeping or fighting? Well, in war, it doesn't matter who's right. It only matters who's left. What we have here is a failure to communicate. Okay, I only have like a minute or two left, so let's just do some commodities. So the market was shocked by the huge rally in oil last week. Isn't it funny? It's so funny, isn't it? Did you read about that? The world was just shocked by the sudden and unexpected rally in oil prices. It must have been Iran, or it must have been the Kurds, or it must have been, right? What did you read it was? I read all kinds of things like there's a regime change in legal ownership in Kurdish oil fields of northern Iraq. That's why oil prices went up. I mean, I am not joking about these things. You're like, I'm on the floor laughing of what a bunch of nonsense, that level of ridiculousness is just shocking. Like, really? Where did you go to school? Right? Northeastern, Western, right? Northeastern West Virginia. Right? Maybe it went up because it was the right place for it to go up. So remember, we drew this when we were up in here. And I said, oh, well, we're at resistance. We're at monthly reversal pivots. You know, we're up at the high end of the range. So I identified this purple area. I said, yeah, well, if it come down, we're going to look at these areas down in here. And there's a cluster of stuff going on there. So either here or here, it's going to turn around and head back up. And so we predicted the down, and then we predicted the up. It's just what was supposed to happen. No big like shocker or anything, right? So I just love being smart money. How about you? That had to do with legal ownership changes of Kurdish oil fields in northern Iraq. That's why it went up. Uh-huh. Are you stupid or something? So yeah, anyways, I think it just came down and made a 50% Fibonacci retracement, kicked off of the old resistance, which is now support. I don't know, I think oil traders bought it. I think that's it. I think that it was the right place for an oil trader to buy oil. And if you didn't do that, then you're just not an oil trader. Right? Just amazing, the redonkulousness. So, I don't know. Yeah, I don't know. I guess unsubscribe, right? From those guys. Yeah, no. Yeah, Iraqi oil, but in the stuff up north that the Kurds control, they're having legal battles over who owns the oil, and that there's whatever, whatever, dude. How about some Goldilocks? Okay, Goldilocks. We have this set up, right? Remember, a break of the channel to the upside sets up a potential head and shoulders. Which I hope brings in some dollar strength, huh? Right now, the buck is weak. Stock market getting ready to go up. Oh. Right, I'd be remiss not to mention, today earnings season starts. Okay? What is the mood of earnings season? Everyone says it's going to be pathetic. Awesome. What happens if everybody's right? The numbers are pathetic. Well, we already priced that in. Those idiots are already out. They got out, I don't know, last week, right? So what if they're wrong? What if it's just not bad? What if it's okay? A lot of people are on the wrong, or they're not on the wrong side of the trade, because I don't believe most wealth managers are short the S&P 500, but they'll just be out and they'll say, holy snap, I need to get back in. Right? That's how you trade, baby. So I don't know. It started out ripper awesome. So let me flip over to that. S&P. S&P. Zoom in a little bit on the 4H. S&P. Let's do it this way. This is a little crooked. Okay. There we go. And oh, we had a head and shoulders on this one if it came back around, right? Is that what this is? This is an old head and shoulders? Yeah, okay. If that broke and did that and that. Okay. As you always know, I believe there's a headwind. Most people make money on the way up. And yeah, we have some concerns about the state of affairs of international markets, but the United States is unique where it's 70% its own market. Okay. So I actually believe this is going to go up. Okay. If it wants to come down, it can. There's no problem, about that. I just buy the lower dip. Okay. But most people make money on the way up, and we're in it's the end of the beginning of the second quarter. So if all these people scaled out getting ready for the new earnings season, who knows? So as long as it's not disappointing numbers, even okay numbers could move this up. Because a lot of people will say, man, we got out of the market. Our analysis said the numbers were going to be bad, but they're not bad. So we're missing it. We got to get back in. Okay. Cream says, is it in play? Well, does it look like it's making lower lows? Okay. If you shorted here, which is how you do the head and shoulders, okay, it's decision making time now, right? And you're going to be, really worried about kind of this area in here, right? So, today might be a test of nerves for you. If your stop is sort of around this pivot cluster, then you say, you know what? I played the head and shoulders, and you might as well just leave it in. Because if you let it break this, it's not bearish anymore, but then, there's not enough really to even take profits. So maybe you get lucky off that pivot cluster, right? But, and that's a big but, remember, I believe there is a headwind. Not a headwind, in this case, tailwind or something. A trade wind. Okay? It's easier for this thing to go up than down. It's much more likely to go up or down. Okay? It really is a headwind, though. We're trying to head north. Now, it can come back down faster than it can go up. Okay? It's like pushing a boulder up a hill. You're just strong enough to do it. But if your feet slip, holy smokes, get out of the way. So it can come down like a ton of bricks, but it should slowly go up. Now, this big decline that we had was when the Fed told us they were going to jack up interest rates quickly. Okay? And that's not good, but okay? So really, you should play the range. Okay? Remember that lowest part here? This is where I said if it gets below that, I just don't know. I mean, I don't know where the next support is. There is no more support. So it has to go up here. And sure enough, it has to go up. Where's the top? We're up in here. So we're really just range trading, right? So if you are a bear, let's say you're a bear, and you can be, then you're thinking this. Okay? I still think there's a lot of pressure up in here. Okay, so really with the stock market, I am bullish to neutral. Okay, so if I was sitting down with clients, I'd say, well, there's probably somewhere better to put your money than U.S. stock market, but I would still consider buying dips. Okay. Okay. And we just got to wait and see what happens from here. Dollar is weakening, so gold should go up. Now remember, Harvard told me I was wrong on that. I'm like, but everybody knows it's the anti-dollar. No, you're wrong. So anyways, Harvard knows best. So gold seems to be going up at the same time the US dollar is falling. I guess just a coincidence. So anyways, as we saw today, no news on the calendar today of any serious importance, but it's going to be a good week. Watch the pig, watch the kitty cat. By pig, I mean Great British Pound if you're a newbie. And the market is net bullish on Aussie and neutral on Kiwi. Very interesting. Yen has been strong, and yeah, the velocity of its strength was surprising to me, but the timing, not at all. If we could talk about it months and months and months in advance, then it's predictable. The velocity I can't tell you because I don't know how many let's say investors are going to take profit and therefore gain the strength. But the velocity was a surprise, but the reason it fell isn't. And so is today or this week, are we going to print a bottom? Is it going to go down to 105 or 100? Yeah, maybe. I look at the 4-hour and it says bear. I look at the 15-minute and it says take a shot, dude. 108.08. Yeah. USD yen. I guess, right? USD yen says take a shot, bro. 4-hour says it's not going to go all the way, but it'll go somewhere. Right? There might be 50 pips above. Could be 100 pips above. Could be 1,000 pips above. So, won't it be interesting, huh? So anyways, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. I'll see you the next day. The next day after that, I will be somewhere over the Pacific Ocean. And so I will have to miss Thursday. And Friday, if things go well, you'll catch me at fxstreet.com where I'll do my webinar from southern China, Shenzhen. It'll probably be, I don't know what time it'll be. Daniel, what time is it going to be for me on Friday for me to do 7:30 in the morning? What is that? That's like midnight, isn't it? Oh, is it 12 hours off? Are we going to be back in time? Yeah? Cool. Thank you, no. Wow, really? I like Brazil, Felipe. Is it Felipe or Philippe? Yeah. Felipe. Yeah, I like me in Brazil. I've been to Porto Alegre and even farther south, down to the falls and stuff. But my wife's been all over. Yeah. Bahia. Yeah, my wife's been to Bahia, Rio. Yeah, no, that sounds good. Honestly, though, let's say I'm going to be in Dubai in November. So what'd be cool is I would like to do Portugal because I think there's about 10 people there that want to get together like right off the bat. But I'm pretty busy now that I'm officially a grad student. and I got some other things going on. So busy. But you know what? That's all right. I'd love, yeah. There are like 10 people in Portugal that want to get it done. So I thought I could do like a mini training event, and then we just go out on the streets and terrorize the old people. Yeah. So it's just out of loyalty, really. I need to do Portugal. Hey, how long does it take to get to Morocco? Can I do a quick trip to Morocco from Portugal, or is that just crazy? Can I get on a boat and wake up the next morning in Morocco? Toronto. Toronto. I can't afford Toronto, Patrick. Oh, I'm telling you. Well, there is actually an interesting flight. I think it was for Dubai. I could fly to Toronto, and there's a 22-hour layover. That'd be an interesting thing. I'm like 22 hours. That's enough. Okay. Well, anyways, let's go, guys. It's a busy day. Peace on earth. May the pips be with you. May your profits be above average. And yeah, hope you have a great week.